Good afternoon, everyone. I'd like to welcome everyone to the results call, the annual results call of CRDB Bank PLC. This is the results for the year 2024. And I think this has been a fantastic year, and I look forward to hearing from the management of CRDB Bank as the performance reflects. I'd like to welcome Abdulmajid Nsekela, the CEO of CRDB Bank, and the entire team of CRDB Bank to carry on the presentation. Thank you very much. Welcome.
Thank you, Prof. And once again, good afternoon to you and to the rest of the stakeholders who have been able to manage the call. I'm here with my colleagues, our group CFO, the head of strategy, the director of corporate sector or treasurer, and our team from investor relations. So we are happy to have this call, and thank you both for this day. We'll try to be brief with the assumption that the majority of the joint members have read our results. So we have take much more questions on the results or additional commentary based on the analysis that I've made separately. So we have made very brief presentations, which we'd like to take you through. The way it has been structured basically is a general to specific issues, what has made us be able to achieve what we have achieved so far, and our CFO will be covering the numbers specifically, and then obviously open for discussions. If we was to move on the first slide, I won't take much time on that presentations because this is what it defines CRDB basically in terms of purpose, visions, and emissions. So I will not need to speak much because it's a well-known slide. Next. The next slide. Can you hear me?
If you can come closer to the mic, it will help to hear you better.
Are you able to hear me now?
Yes, better.
Okay, thank you. What I was saying that this year marks our 30 years of our presence in terms of offering banking services. So today, which I've just highlighted, speaks about our journey, and I may not need to dwell much on that slide. It's for information and for noting where we're coming from. I think the next slide. Equally, the next slide, just speaking where we are and why CRDB in terms of operations. So we basically what we are currently offering. I think being in Tanzania, we are seeing Burundi, our presence, but it also highlights in terms of how are we distributed in terms of our services, area of presence, in terms of alternative channels, physical channels, as well as digital channels. And that's the number itself, so I may not need to speak much. Of course, if we speak on the numbers, especially which is being projected, you can see that we are pushing much on alternative channel and digital channel rather than bricks and mortar. So if we compare our performance for the last couple of years, we haven't grown much on the physical channel. The next slide is more highlighting our capabilities and how are we structured. What is our capital base as we speak today, which extends around 1.7 trillion. Our balance sheet, which will be spoken by CFO, standing around 16.6 trillion, but also our customer base has increased. And nevertheless, we still believe on gender equality. Of course, you can see how the distinct number of staff, which is about 4,000. And when I say 4,000 staff, it's be good to know that that's a group staff number. It's not a PLC-based number. Our market share was still commanding the max mid shares, which is standing about 12%, if you compare the rest. The business model has not changed. You see the same, covering the most holistic in terms of financial service, looking on the entire segments. The next slide. When we are looking at the performance of last year, we should also be mindful that our strategy hasn't changed. It's still being driven by 3 pillars. It's about our defense, what we have. So we remain focused within the business we're operating. grow the same business, but also taking the new opportunities, but also creating the resilience for the future. And that has been the strategy, which remain leading the bank on this. And this is our third year of strategy, which will be ending 2027. So we just completed our second year, and it has been success. We are within the course of our strategy directions. The next slide, we just need to remind our stakeholders our governance is still robust. The bank is well governed within the best practice mechanisms from the board level to management level, with a clear identification of what should be done, how should be governed. So I wanted to highlight to the stakeholders the bank is well managed, governed with best practice framework in operations. And we do believe that with corporate governance approach which is being implemented, the bank should remain resilient, both in terms of current operating model, but also ready to adapt to the change of the future. The next slide, it speaks about the environment. And I believe that for those who have joined the call, Tanzania remains vigilant. And we are very pleased with what is happening currently from the government level, as well as to the international level. And I think if you look on the current performance of the country has been rated by Moody's, and the result was very positive in terms of B1, B2, which is indicating it's stable. And that is has uplifted the credibility of the country. And that also aligned towards the CRDB rating, which is also given us, I would say, upper way of the way we have rated. I think more important is to look on what is happening in terms of inflation. And I would say that it has been relatively stable. If you look on the current inflation rate, which is standing around 3%, I think compared with the rest of the market, we are doing fine. But also when you look on the other side, where I think maybe you can look at this on the foreign exchange. This was a challenge in Tanzania, but also challenge around the East Africa and the globe. But I'm happy that as a bank, we're able to navigate very well. And I think the country is still sufficient to cover the inflation according to the projection way. Sector-wise, in terms of GDP contributions, agriculture still remains as important sector. And you can see the other sector, which is also constructions. And I think other services, which is combining the many other services within the different sectors. On the banking sector side, last year can be said as it has been stable with a different way of perspectives. If I were to speak in terms of regulatory perspective, I think I will say that BOT, obvious, the central bank has introduced the issue of payment in terms of currency. That was regulated last year through the Ministry of Finance in terms of payment in local currencies rather than foreign currencies. We haven't seen much impact in terms of that because it's being implemented. There is also the guideline which was issued for commercial banks. And what I'm happy to inform the stakeholders, these guidelines, if it's good CRDB, we are already ahead of the game because sustainability was embedded some like 4 years ago. And we have been able last year to issue our sustainability report. And we are going to issue another one this year, which is more advanced. So basically the regulations for us, we are already in compliance. I think the other important element to note is on the area of the other area which is very important to note is on the regional state geopolitical impact. As you remember, we are currently in DRC, and it's now almost 1 year of operations. We are doing relatively okay, but of course, instability, which we have seen in Goma, raised some concern to many other stakeholders. But I think, given the nature of DRC is a big, different country. We are in Lubumbashi as we speak, but we haven't seen much disruptions of the business. So we are putting us on the monitoring side to ensure that if anything happens, we are able to take actions positive and to ensure that we remain safe. But what we have seen, we haven't seen much disruptions of the business in the other side where we operate, which is more or less on Lubumbashi. But we will be soon opening operations as well in Kinshasa, because the infrastructure is ready, waiting opening, and we should be able to operate smoothly within Kinshasa. But that means DRC, our focus basically is pure on much more of transactions as well as post-integrations as an engine. But we have not done much on lending side, which is cautious based. So if I was to move on the slide, it's why we have been able to achieve what we have achieved on the next slide, basically. I think I won't speak much on the performance as you see on the slide, because CFO will be covered. But what you have highlighted, we are moving toward the positive directions on most of the indicators, being return on equity, NPL, cost-income ratio, in terms of front asset, but as well as profitability. And this has been the journey for the last more or less 6 years. And I'm happy to see the cost-income ratio is on the declining trend, despite the performance and efficiencies is on the improvement side. But there is a reason for that. And I'll try to cover the reason why we are able to achieve what we've achieved. What has been driving the business? I think first of all, remember on the strategy we have, I think, 3 pillars: reinvest, grow, and the future. So what we have done, basically, the biggest area we have changed is about implementing the strategy that drive inclusivity. When I say inclusivity, it's about where do we see the bigger growth and how do we streamline our operations to maximize the value of what we have already created. In that case, we're able to believe that digital is the key, and retail business is the biggest area where we need to grow business. But we have to have a different approach. So we opted digitally in terms of how we acquire customers, acquisitions. We have also created solutions that fit for segmented specific in terms of transactions or need-driven initiative. And that has been able to support our growth, both for retail as well as on the mass market. And the next slide, what we did from the operations perspective was to drive our digital channel. And I think you can see from the operation perspective, where we believe that our branches should remain at the very center, but more service should be offered from the digital channels. And even the growth pattern of our infrastructure should remain on the alternative channel side. So you can see from internet banking, where we have now implemented 360-degree value chain, meaning that from the corporate level, SME level, the rest of the other business, where we provide payment options to ensure that we follow the money. Then ATM, it hasn't grown fast much, but rather than add expansion, is what is keep on growing side. And maybe to highlight on the other side that if you see the number of customers being increasing, we have enabled our address banking because of the new system we implemented to create their own customer base. That means they are also now a acquisition channel. But the other important thing that majority of our services has been pushed to our SIM banking. And you can see that what is happening on these channels is basically where we are getting much more non-interest income. And this channel has been very important. The next slide, we have covered the issue of technology. And I think that's where we believe as CRDB is key. First of all, is to ensure that we create a more robust service in terms of customer experience, and meaning the customer are able to serve even themselves much more. The second issue was about how do we keep innovating the current product, which we had while advancing, but also growing the business by adding value addition of the same services. And that's where we have been able to create more revenue. The next step is about how do we use our digital to create enablers. And I believe that this has been enabled us to have more flexible, say, efficient TAT in terms of how we deliver the service. We have enhanced our technology technology advancement that has enabled our service to be robust, but also giving feedback on time. The next slide, what we have highlighted, cover a different area and what opportunity we see to optimize. One was about to look at the current market trend. I think I highlighted about last year there was a challenge in terms of forex price adjustment, and that's also related with how do we assess our market and readjust ourselves to these operations. It was about price discovery mechanisms, but we are able to price in a segment based on what is happening, long-term, short-term, based on the structured one. The other issue was about how do we create partnership in terms of revising funding options. And the funding options made us to remain vigilant in terms of pricing mechanisms, because we're able to have, I would say, affordable or flexible terms funding, which gave us the room not to adjust much on our pricing mechanism. The next step was about how do we stabilize our systems. I think this is very critical. And that gives us stability of our services. But nevertheless, given the fact that we focus more on SME, our MSME, there was a need to decentralize some of our operations in terms of enabling, empowering our branch network through branch managers to be able to offer more on SME. However, we believe on this perspective, and that's where we opted to digitize the majority of the processes, so that they're able to be empowered, but digitize more the process. The other issue about automation from our processes, where we have been able now to push much more of operations in more of digitalizations in terms of automations. I think the other issue was about to review the current partnership we have with many suppliers, many partners, and did some renegotiation. And that's why you have seen our cost has been able to be modernized, modified, and we see much of efficiency, including renegotiation of some of the contracts, including the phasing of some of the systems, because now we're moving to the new robust systems, and I'll speak about that soon by next month. Toward end of March, April, we are moving to our new core banking systems, and that means that will be much more robust, much more efficient of our services. The other issue is about credit enhancement in terms of risk management, and I think you have seen our NPL. It speaks a lot about quality of our portfolio, where we're able to identify customers and say how many customers are contributing at least 50% of the portfolio, and how do we keep them operating, but how do we keep them close. The issue of cybersecurity, it cannot be neglected. I spoke about enhancing our technology, and I think we also saw some challenge in the other market on cybersecurity. We have enhanced our system to become more resilient. The lastly, we have been conducting what we say stress testing on our portfolio on monthly basis approach. That project how the portfolio is growing and then what will happen in the case of any unforeseen events. And that has enabled us to be proactive on attending issues on time. The next slide is about human capital. I think that is very critical because it's very important. We have made sure that our operations is progressive, but also is managed with right skills. I think one of the things we did across the network was about training our key staff. When I say key staff, for example, all loan officers that have been empowered, but also trained. We have also created tools for early warning signal and what should be done, and that's the monitoring side. And that has enabled us to do more in terms of human capital. But the other things is about keeping our staff happy with productivity mindset. It is very clear. The performance management program is now say is working because most of the team is aligned toward the pitch for growth. But I think one of the key important elements we have also deployed is how to create a very conducive environment where the performance management systems is robust, where everyone can be able to assess themselves what they have done in a day. In that being the case, what do we see and what should we see going forward? I think if we was to look on how the current bank operates, and that's where you see the features come forward. And I spoke about alternative channel. Currently, 98% of operations is going through our alternative channel. And meaning 53 is about digital, 45 is agents, that's all of them is alternative because they outside the bank. And the current branch activity is almost 2%. And that has given room for the branch staff to focus on key activities on measure risk management there. But very important, you can see what is happening in the majority of these transactions is happening out of working hours. The next step, I think, on this slide I want is to highlight where do we see the future, because CRDB is critical, and I think it's important so that we remain resilient on the market, which is critical. Special group and women is where we need to grow our base by customer base. So when we created special program, we dedicated a product as called the badge. We have been able to train more than 500, but we have already acquiring MSC customers, almost 500,000. These are the new business which we never adopted. But these are coming up with a well-trained program attached with our foundations. So foundations, it has taken over about financial literacy, informal to formal, informal to semi-formal, then informal, and where we are growing into the SME space. We see it is giving us a big merit, and we have been able to achieve a big result from there. But also, through these initiatives, we have been able to generate what you call, I won't say cheap, more affordable deposit. Because the small deposit is, the bigger it becomes, the maximum of the volumes and the numbers. The next slide, it speaks about what we did to diversify our portfolio, especially moving on balance sheet to trade finance. I think trade finance has been one of the great businesses we did last year, but collaborating with our partners. Remember, I think one of the biggest challenges, despite of importation, we had the partnership like Fredrick, IFC, and the rest. We have been supporting the initiatives through the trade finance to support our customers on the importation side. The next slide is about where do we see and how do we remain relevant. I think, as I said before, agri is one of the biggest sectors, but also a sector we need to be cautious, well structured, but well processed. So with our current program, which is being implemented toward the end, the CRDB, we have now started focusing on small agriculture, but structured, and reversed with insurance cover, which has also been embedded on that. And that comes with a program which is called CRDB, but it's supported with the grants for about $10 million on the tools, but $10 million on the guarantee, just to diversify. What we are looking here is more of a number for micro, but in the agriculture space. And that comes with additional technology in terms of tools, which will be financed. The next step, I think, is about infrastructure. Last year, given the funding options, apart from partnership, which is driving our strategy, we also did our own local initiatives, raising the infrastructure fund. And I must commend Professor through iTrust on the support of these initiatives. It has given us quite substantial deposit, which was basically the project was about protection was about 150. We're able to raise 303, which is great. And this gives us option funding. And the beauty of this funding, it comes with additional benefit, given that the majority of the contractors who are currently operating with Arura, they are now moving toward CRDB. That gives us more deposits, but also more customer base and more business. So these are the some of the area which has enabled us to achieve what we have achieved. And there is more which I could have been able to share, but I'm also mindful of time. So if you allow me, I want to allow CFO to speak a bit of the numbers, and then we'll be ready to respond on any raised issues.
Thank you, MD. Thank you, iTrust, Prof. And thank you, investors, for joining. On the financial part that actually explains further on what we have achieved, and actually sums up the story into numbers. Looking at the balance sheet, we are able to close the year with a very strong growth in terms of the balance sheet. We had a balance sheet growth of 25% in total asset, closing total asset at Tanzanian shillings 16.6 trillion, the largest balance sheet in the market. This was mainly supported by the growth in the loan book, growing at 23%, closing at 10.3 trillion Tanzanian shillings. In terms of the deposit, we closed the balance sheet with the total deposit at 10.8 trillion Tanzanian shillings, which is a growth of 23%. But noting is this growth was mainly backed up by a strong growth on the retail segment, where we, as you see in the next slide, we recorded a very strong growth coming from the areas which otherwise we could have not mobilized the deposit. Our financial inclusion strongly support this deposit mobilization. The digital touch point and the digital network, the agents banking, strongly supported the growth that we see today. We were able to mobilize total shillings of 2 trillion in absolute value in terms of the deposit growth. So when we look at the loan book split, you realize well-diversified loan portfolio, corporate closing at 47% and the retail at 53% of the total loan book. Well-diversified in key economic sectors, agriculture taking 19%, consumer loan or personal loan 36%, trade 13%, manufacturing 9%, financial intermediary 5%, and the others which include building, construction, mortgage, and the real estate commanding 18%. So in terms of the funding side, deposit continue to command the highest percentage of our balance sheet funding, where in terms of corporate retail segment, 62% of our deposits were coming from retail and 38% from corporate. With the current split, local currency 78% and the 22% being the foreign currencies. Our CASA funding stood at 85%, which is a strong funding base and a strong and a stable funding base. In terms of our P&L, we closed with a solid profit after tax growth at 30%, closing with a profit after tax of 551 billion, which is mainly supported by the growth in the top line, the interest income growing by at 27%. In line with the growth that we saw on the balance sheet in terms of our loan book and our government securities. Our interest expense grew at 19% despite of the escalating funding cost in the market. And that's mainly explained by the previous slide where you saw the main growth in terms of our funding was coming from the CASA. Despite of the escalating funding cost, you could see we are able to contain the growth of our interest expense. Our cost of funds remained at 3%, and our net interest income grew by 30% to 1.1 trillion. Non-funded income grew by 14%, mainly supported by the strong growth on our alternative channel income, as we'll see in the next slide. However, we had a negative growth on one line, the foreign income, which was affected by the depreciation of the T shillings against the dollar as we are closing the quarter. Our operating expense was maintained at 15%, as highlighted by MD. Our strategic initiative towards the cost management, streamlining of our processes, automation of our processes, and more of the volumes taking place on our digital touch points supported the containment of the operating expense, which grew at 15%. Our cost to income ratio as we are closing the year stood at 45.7. So just an highlight in terms of the non-funded income. When you look at the non-funded income, you could note overall 90% of the non-funded income is coming from the fees and the commission, and mainly driven by the fees and the commission, which grew at 26% on year to year. And then the main contributor of the non-funded income and on the line of fees and the commission is the alternative channel, which contributes 68% of the total commission and the fees, and mainly led by the SIM banking, which commands about 46%, and 32% coming from the agents banking. So a strong base of non-funded income, mainly supported by the alternative channel, and that is actually backed up by the strategic initiative that we are taking and we took to invest in technology and driving the digital adoption. As highlighted, we closed our cost to income ratio at 45.7%. That's coming from 49.5% same period last year, mainly from our strategic initiative in terms of cost management, the process review and the improvement, the automation, and the more the drive towards the digital adoption and the more volumes of the transaction taking place on the digital touch points. We maintained a good quality in terms of the loan portfolio. Our NPL closed at 2.9% compared to 3% in the same period last year. In terms of the split of corporate retail, 56% of the NPL coming from corporate, and the 44% from corporate and the 56% from retail. We closed with a strong liquidity ratio at 28.2%, well above the regulatory ratio, which is 20%. 60% of our total funding coming from deposit, and as highlighted, our CASA standing at 85%, a very strong and a stable deposit base, but again, a very affordable fund base. Our borrowing closed at 19%, and our shareholders' equity was at 13%. We closed the year with a strong capital position at 14.54 capital, and 15.5 in terms of total capital, well above the regulatory capital requirement, which is 12.54 and the 14.5 total. In terms of our subsidiary continued to contribute positively to the group profit, 6%, as we are closing the year, mainly driven by profit from our abroad subsidiary, which recorded a profit of 39 billion, which is a 58% year-on-year growth. Our insurance, CRDB insurance subsidiary, again, for the first time, was able to break even in 1 year, closing at 344 million. Again, well above the breaking even well above the planned time, and recording the highest growth in terms of the growth premium underwriting. Our Congo subsidiary closed with a loss of 6.6 billion. This is the first time Congo insurance subsidiary operated in a full year. We are confident that our Congo subsidiary should be able to break it even within a planned time, despite of the political instability that we are seeing in the market. So before I go to the last slide, I would like to thank the investors for the positive, the positivity in terms of aligning the stock price to the bank performance. Our stock is the highly traded stock in the market. Closed the year at 670 shillings per share, and that is a 46% year-on-year growth when we compare the price the stock closed with as in 2023. The current stock price is now at 730. We believe we should see better repricing and aligning the stock price in line with the bank performance. And I would like to stop here and hand over back to iTrust for further comments and the question.
Thank you, Fred.
Thank you.
Welcome, Prof.
Thank you very much, Abdulmajid, CEO of CRDB, Fredrick Nshekanabo, the CFO. I think I will start off just noting a few things. First of all, congratulations on the success of the Samia infrastructure bond. This was a ground-setting and groundbreaking, and at iTrust, we are very honored to have been part of the team that worked with CRDB on that particular bond. But moving on to the other substantive matters, I think there are a couple of things that really stood out. The fact that CRDB is leading in sustainability reporting, CRDB's mobile banking, SIM banking, growing by 62% in the year 2024, moving to a new core banking system that is going to increase the bank efficiency and performance for coming years. The fact that you have 98% of all your transactions outside branches driven by digital footprint that you have. On the numbers, I think the numbers really speak for themselves, and I speak for all investors by saying that this has been a quiet and impressive year and a great performance, and congratulations to the whole team led by Abdulmajid Nsekela on the performance of the bank in the year 2024. I think all investors see the performance of the bank, assets at record level in the Tanzanian banking system at 16.6 trillion, up 25%. The loan book and customer deposits up 23% in the year. Interest income up 27%. That's the improvement in margins. The profit after tax up 30%. I think those are all metrics to be envied, and I think a really, really fantastic year for CRDB. So I will start off. I have a couple of questions that have been asked. The first one was by Randolph. He is asking on other comprehensive income and asking whether those are gains and losses on bonds or equities.
Should we respond?
Yeah, I think I have two questions so far, so please respond.
Okay. The other comprehensive income are mainly on bonds, and we don't have a big portfolio in terms of equity.
Oh, so this is just basically changes in the value of the bonds that are held for trading.
Yes.
I think the next question came from Ali D. He was asking about the fintech strategy of CRDB, whether CRDB sees fintechs as competitors or partners, and the plans to deepen collaborations. Also, I had a question on future-proofing of CRDB, adapting to disruptions in the financial sector, in AI, blockchain, fintech disruptions. And then on the mobile money side, he had a question on the issue of growth of mobile wallets like M-Pesa, and how CRDB is positioning itself. And finally, whether CRDB is looking at developing as software as a banking as a service, BaaS, or super apps, and the regulatory challenges faced by the bank in terms of innovating in this space. So that was Ali D's question.
Thank you, Prof. And thanks, Ali. I think when you speak about fintech startups, because that is one of the directive pillars in terms when you speak about the future proof of the bank. And maybe to highlight that we have been developing so many products with the technology advancements. What we have done so far in terms of decisions, but also implementing already, we have now decided our platform to, instead of simply to be a platform, and no longer like just a solution, but rather platform. So what we are currently doing is actually pushing majority of the service to the sim banking as a platform, but also integrating with many other partners. We are part fintechs because we believe in partnership, and we do believe that there are so many fintechs who are already implemented some solutions. And a good example, for example, there is a company which we have already integrated. We have just started operations in terms of registering all the farmers, where we have been able to provide micro lending. We have also integrated and digitized and started offering microcredit between ourselves and telcos, the M-Pesa, the Tigo Pesa. We are now with Airtel at the next phase to deploy their services. So when you talk about the push and the rest, these solutions are already integrated inside the day. Nevertheless, we are currently in the final stage ourselves with telcos, continue offering digitized services to SME. Well, that's where I believe it should be the case. And we are moving away from using the POS, because we believe that QR code is the way to payments. And we are now deploying QR code countrywide as a solution of payments. So we do believe that we need to continue with the mobile operator in terms of their mobile money, and deliver it on the other solutions which can't be offered by the mobile operator. So they're not competitor, we just complement it. And that's what we believe is our directions. Secondly is about other fintechs. Remember, I think one of the things we are working with through our, apart from banks, but also with foundations, is connect the fintech and ICT commissions, which have been growing the innovators and the fintech solutions, linking on the agri, payment, and other innovative solutions. We have also adopted innovators in terms of everything of innovations. We are giving currently what we call seed capital, just to complete their solutions together with innovations. We have also strengthened our developed countries, where we have a quite robust team internally, which they are also developing on product, but also taking on shelf with telco. When you speak about regulatory framework, I think what we see is that we need to continue with the regulator, central bank, and the rest to harmonize our regulations. They have not limited our innovation mindset, but nevertheless, we need to simplify even further. And even the issue of moving away of acquisition framework, currently, we are now enabling our operations to be biometric, moving away from paperwork. That means all our customers, by which of going to our branches, wherever they are, they should be able to use their biometric to transact. And that is increasing security, increasing the issue of cyber security, and fraud management within the operations. So when you speak about where do we want to be, I think when I spoke about the deployment of our CBS, the core bank systems is multi-currency, multi-country, multi-language. What does it mean? That means all our operations, being in Tanzania, Burundi, DRC, in the other markets, will be seamless. And that enables us to give market solutions even to our subsidiaries of what is being offered already in the PLC bank. So digital is our directions. I'll say that. We are now deploying all the systems, we are phasing all the legacy systems. So this year is actually the year of maximizations. I'll say that. Because by May, majority of the system will be operations. We have done new switch implementation, ESP implementation. These are already completed solutions. So we are now moving to the fast deployment of solutions to most in the market. And that's where we're heading. And I think maybe if someone can add, Caroline, do you have anything to add?
Yes, thank you, MD. I would also like to add, there was a question around what is our strategy in terms of AI and blockchain. And I think just adding to what the group CEO has mentioned, following the deployment of our CBS, we're also finalizing our AI strategy. And so it's something that we're looking into quite closely, especially given the fact that we've been operating for 30 years. We do have valuable data and information that we would like to utilize in order to make sure that our customers are able to transact better and we're offering more intuitive services. And so we are always looking at what's in the market, planning for it, and at the same time, while continuing to engage with the regulators, just to make sure that whatever that we're experimenting with is in line with what the expectations are. Thank you.
On the case of blockchain, I think what we are currently doing is more monitoring the trend. We are also preparing our team internally, but also putting our policies in line with what is happening in the global market. We are doing so because it has not been operationalized in Tanzania, and Central Bank are still also doing the same mechanism. So we are putting ourselves ready. In case it happens, we should be able to move in the market as it fits. Yes, additional?
Yeah, thank you. Additionally to what MD has said with regard to the blockchain and all the coin, we are engaging already the international developers in terms of exploring whether we can have our coin as a bank, like the stable coin, like other market out of Africa. And I think the conversation is going very well. So we are going to incorporate in our strategic direction and make sure at one point we should be able to design a coin that is going to address, turnaround time in payment and all those things. So we are to Emily's point, but again, we are working before we run, so as we may not, disturb other system. Thank you.
Thank you both.
Thank you.
Yeah.
For the
thank you very much.
Yes.
Yeah.
Welcome, Professor. If there are other questions?
Yeah, I think a few other questions. I will just summarize them collectively. The first one being from Darren Smith, which asks on the outlook for the NIMs in the year 2025. And also from Randolph asking for what is the outlook on the ROE for the year 2025 also. Bhavit is also asking in terms of the loss on FX loss in the last year and the last quarter, and what was the main driver for that?
Maybe we can go to the outlook straight because of this question coming through. When you look at the outlook, you'd note, well, from the previous call, we had highlighted on the outlook in terms of the balance sheet growth, and mainly on the loan book. The loan book outlook is standing at a growth of 15 to 18%. Remember, in 2022, we are coming from a growth of around above 30%. And then as we are engaging, we are talking about the driver behind this growth. And we highlighted the way we are seeing this one settling back after the catch-up growth, the post-COVID growth, and the economic reforms in the country that were happening. So we see this one in 2025 growing at 15 to 18, deposit growing at 23 to 27%. Our non-funded income would be growing 35% to 38%. Our cost to income ratio, we see it at 40% to 42%. Our ROE, as asked by Darling, is projected to set at 26% to 27%, and that is more or less at close to the same level that we closed with this year. Our return on asset closing at 5, in the range of 5 to 5.5%. Our NPL, we see it at 2.93%. The question was on where do we see our NIM? We continue to project our NIM in the range of 8 to 11%.
Thank you very much, Fredrick. I think that answered those questions. If I could ask one question, yeah.
Sorry, Prof. If I could also respond to the FX question.
The FX question, yes, please.
So I had explained it as we are closing the last quarter of 2024. You noted in the market the depreciating dollar against the Tanzanian shillings, and then we had a position whereby we had a swap where we had sold the dollar against the shillings as a swap, and as we could not unwind it in the full amount in a month because of what was going on in the last month of the year, this position hit our FX income. But the good news as we started this year, and the dollar started to appreciate against the shillings, we have seen the similar income being compensated in our numbers, and you see it as we publish this year first quarter numbers.
Thank you. Thank you, CFO, for the clarification.
Thank you very much. Yeah, I think we'll just move on to there's a little bit of a question, I think, which was covered a little bit earlier on the political risk in Congo and CRDB's preparation to deal with or mitigate that particular kind of risk, especially now that it's moving into Kinshasa also.
Yes, thank you, Prof. I think what I've just highlighted, of course, we have activated, I would say, our risk mitigation framework in terms of state. What we are doing currently, we are monitoring what is happening in DRC Congo from the Goma side, but also looking what is possible to happen in Lubumbashi. As of now, there is no major changes or major impact we have seen in Lubumbashi. However, we have created mechanisms where we should be able to take necessary steps to react, to respond on what will happen in Lubumbashi. The same also applies that what we see the situations in Kinshasa is also that we don't see much challenge there. But what we decided to do, respecting of being ready to operate, we have put on hold, open our operations in Kinshasa, even though all the preparations steps are ready for operation. We were just monitoring, and we should be able to respond back in the coming month whether we could be operating. So I would just like to say that despite of the political challenges in DRC, there is very little impact what you have seen from the other side of where we are today. But we are staying on that.
That's good to know. I think a last question I want to ask is on the liquidity. I know Fredrick commented on the liquidity ratio at 28.2% being above the regulatory limit, but we have seen in the Tanzanian market liquidity challenges in both dollars, USD, and FX side, and also Tanzanian shilling liquidity challenges being quite really challenging for some of the banks in the system. Can you maybe comment on the liquidity situation and how CRDB is mitigating its liquidity in terms of this challenging market environment?
Yes, I think you have narrated very well that liquidity has been a challenge. It was a challenge last year, and we see it happening this year. However, we see a different reflections. We have seen a challenge on forex side, which is happening currently, and there is much incremental on the teaching side. I'll say what we have done apart from the recent closed infrastructure bond. We have also deployed our continuous campaign focusing on the mass market. And I think through our current operations in terms of agency banking, but as well as our branches, we are running nationwide campaign of the deposit. Secondly, we, as I also highlighted on the Samia infrastructure bond, the benefit of which is coming with onboarding contractors, and that's where we have a bigger portions of deposit through the advanced payments and structured payment in terms of that approach. So from that step, it's also giving us a position to manage our liquidity. The third initiative which we have put in place, and even through our digital, which I also highlighted, is the deployment of value chain financing. I'll give you an example. The like of Baresa, for example, we're now looking on their value chain for their supplier or distributors, which we are now onboarding to support them on the day-to-day payment so that collections is within the bound. And I think you have seen one of the recently partnership created with Puma, and we are doing the same with the rest of the other distributors and big companies. By doing so, we've been able to maintain deposits, which is more affordable, even though we also anticipate that given it's the election year, of course, teaching deposits may not be a problem, but of course, DORA will still to be monitored in terms of operations. Nevertheless, with our current partnership in terms of our global partners, we have upper hand. One of the partnership initiatives we had is about liquidity supply. So in case of forex dollar demand, if there is a bigger need, we're able to raise it from within our partners on the structured based approach where we have co-financing arrangement. Thank you.
Thank you very much, MD. I think that covers the questions that have been brought up. I don't know if you had any closing remarks you wanted to mention to the investors, or we move on to the closing.
What I would just to highlight investors, first of all, thank all of them for their continuous follow-up about CRDB trend and the movement in terms of performance, but also appreciate for most of the raised discussions which we are currently performing on quarterly-based approach and the advice and comment we receive from them. It has given us a other way of thinking and improving operations. What we would like to assure them is that the bank remains vigilant, resilient, and we assure that all the key strategic indicators which might also affect our business, we have put in place all the measures to address, and we are looking forward this year to be another good year. Otherwise, thank you very much.
Thank you very much, MD. I think that really sums up everything. As from investors' perspective, we really expect that particular guidance is really going to be a very good year for CRDB in terms of 2025. And we really look forward to that. So I'd like to extend the thanks to the management team, the whole management team and the bank, the CRDB Bank, for taking this investors call and communicating to investors and really laying out the results for the year 2024. Again, I'd like to congratulate CRDB Bank for a phenomenal performance in the year 2024. Thank you very much.
Thank you.
Thank you.
Thank you.
With
Thank
that,
you.
everyone, we've come to the end of our program, and I'd like
Thank
to
you.
thank all investors who have joined the call. Everyone, have a great evening.
Thank you.
Thank you, Prof.